3 years ago, we're at the depths of a bear market. The financial media, the everyday person, retail, traders, you name it, thought we were going into a multi-year bear market across the stock markets, real estate, of course, Bitcoin, commodities, you name it. Everything seemed like it had to be going down because of how bad things were. That was the bottom. Now, I think we're beginning to see the change in the guards here. Of course, we've heard about good positive signs, especially in Bitcoin. We've heard about the liquidity coming back into the market, and we're also hearing about AI and how much that is going to push things forward in the market, meaning we're going to see new fresh prices, it's going to improve profitability, and things are different. Things are changing because we've never seen this before. But those technologies come to fruition at every single market peak. We happen to get a really strong reason why the markets are changing this time. And that's essentially what we're seeing right now. This is basically the human psychology of bear markets and bull markets. At the bottom, you see the bottom feeders and knife catchers, probably a little too early, the same thing as the toe dippers as it's got here. And then you start to climb out of those lows, looking at bargain hunters and then momentum players. And then, of course, we run into those tops. And the majority of people come in way too late. Perma bulls, buying the dips, buy and hold, all this sort of stuff comes out towards the peak. And essentially, that's what I want to share with you today, as we see many reasons for why we're leading into this peak. Now, if you are new to the channel, thanks for joining. Hit the subscribe button and join us on the journey as we run into the peak of the 18-year cycle and then the major collapse. We've seen several bear markets along the way as we've been documenting this here on the channel, but I think the next correction will be the significant one, the major recession. Now, we have plenty of time to go until we get there, which is why we continue to update the charts on the channel. If you are a returning viewer, hit that like button. Okay, so today we're looking at things that have shook up the market, shaken it up. We've got plenty of volatility that has occurred today. The Fed leaves rates steady despite Trump's pressure. Yet again, what I've been talking about here on the channel for a very long time is that it doesn't seem like the interest rates need to come down. And if they do, it's probably going to be quite slightly, nothing overly serious like what Trump has been talking about. Now, this is not new. I've said this for a long time on the channel, as you guys that have been following probably are aware of. And it seems strange that this sort of thing is occurring, yet all of the professionals and economists and all sorts have expected that the rate cuts should have come down. But I think, at least in my own humble opinion, it's been pretty simple to see because of where everything sits in the market currently. We've discussed the bonds, the yields that have continued to rise. We've also discussed inflation. Yes, that may have come down slightly, but it still is at a level that warrants this interest rate. New all-time high prices for US home prices, which is essentially what happens at the winner's curse of this phase. And yes, I'm going to tie this all back into Bitcoin in just a moment. But I think it's important to understand where we are in the cycle. And of course, every single day, there's something new that comes to the forefront, something that we can update and have a look at how this is occurring here in the market in real time, because just 1, 2, 3 years ago, it was almost the exact opposite. We saw interest rates at near zero, yet the market was in recession, or speaking of recession, which it never made it into a recession, that's the US we're talking about. And then interest rates started to rise. So we had fears of interest rates rising. They rose up to 5.5%. Meanwhile, stock markets went up, crypto went up, house prices went up. The more important stuff, where the trillions of dollars are, is the US home prices, essentially the land, not the home, but the land. That's where the money sits. The home depreciates. The land is what goes up in value. So we saw that with rising interest rates. Now, the market, I think, has understood where this interest rate is, and it's able to continue to climb with this particular interest rate. So if we do get the cut, that could just be more reason to spur on the upside for the short term, but eventually things are going to get out of hand, and that's why we come back to the 18-year cycle. Now, of course, as I continue to mention, we're not there yet, but I think it's important to keep our heads about us as we run into this peak of the cycle. And Paul Tudor Jones tells us the most important rule of trading is to play great defense, not great offense. This sounds opposite to what altcoin specialists, and I say that very lightly, tell us, because they tell you to go all in and hope for the best. And essentially, the greats all say the opposite to that. They say go on defense, not this offense. So you want to have your risk reward at hand here, understanding how much you need to put in to make certain returns and make sure you get out. Don't try and get super, super greedy on the way up. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. Another thing Paul Tudor Jones says is, there is no training, classroom or otherwise, that can prepare for trading the last third of a move, whether it's the end of a bull market or the end of a bear market. And I think this one is very important for today's current environment because of where we sit in the 14 years up and 4 down. We're definitely in that last third of the market. I suspect there may only be 1 to 2 years left, as the Home Builders ETF shows. Now, the Home Builders ETF has been a really good early warning sign when we get to those market peaks. It essentially peaks before the stock market and before the house prices. This is the Home Builders ETF. So it's the home builders that are making profits off the land increasing and, of course, the building that they're putting on top of the land. So this may have peaked, and we're basically running out of time into this final peak. On top of that, we also see the stock markets hitting new fresh all-time highs. The AI narrative has obviously built up a fair bit, and we've run into new all-time highs here for the NASDAQ as well. New fresh all-time highs, probably off the back of Meta, which has beaten all of the earnings calls. Now they're talking about AI. So I guess we'll wait and see whether Zuckerberg decides to change the name yet again from Facebook to Meta to AI, or just put them all together and call it AI Meta, Meta AI, whatever he does. It's running into fresh highs here. It has jumped a huge amount in the after hours market. You got a 12% increase, and that of course has then affected the NASDAQ, running into all-time highs. So we're also seeing the strong narrative of AI return. Yes, of course, it's been there for a while, but it's almost as if we're getting more of that money off the sidelines, and that is now pushing into those fresh high prices. And I think you're going to see many of investors, traders, these people on the sidelines start to play this old offensive game, because the prices are escalating rather quickly into this blow off top. The other thing that has flipped the market today is the US dollar, that has risen quite substantially. I think we're getting shorts getting squeezed out here. We have been at these lows for some time, and the momentum to the downside just hasn't continued to follow through like it has done over the last several months. But of course, in this 18-year cycle, the second half of the cycle, we typically see the US dollar go down. The next levels to the upside, should the dollar continue to rise, we're looking around 103, 104, which is the 50% level, where if we get that far, we could expect some sort of resistance and then resume the downside. This overall trend of the downside can take many, many years, as it has done from the top already in September of 2022. So almost 3 months down. It's all overbalanced. I think there's still further to go here for the US dollar. Now, Trump's also talked about the second quarter GDP announcements that have come out. It's increased at 3% rate. Decrease in imports drives rebounding growth. Consumer spending rises at 1.4%. Measured underlying growth increases at 1.2%. So we're definitely seeing increases here. This is, I think, possibly going to come down to the bottom line. At the end of the day, you're going to see inflation begin to rise again, which then continues to put the Fed between a rock and a hard place, keeping the interest rates where they are. Plus, they have the problems with the bonds and the yields, which have settled down for the time being, but it doesn't seem like they've gone away. But at least the media has stopped talking about it because they're not at new fresh highs. So hopefully, for the sake of the homeowner, maybe we get a cut in interest rates, hopefully something quite substantial. If it does occur, I think it'll be short-lived. That's basically been my position now for coming up to 12 months. If there is a cut, I don't think it's going to be super long, and then things are going to have to eventually rise again. This other chart is just the real gross domestic product at new all-time high prices. If we zoom in here, you can see it jumped up again, Q2 from Q3, as we've had a slight pullback on, from Q1 into Q2, but the pullback was from Q4 into Q1. But since then, it's basically been up almost every single quarter since 2022. And that was basically a very, very short slowdown. Q4 2021, Q1, and then it started to rise again in Q2. So it was just a extremely marginal pullback here, sent shockwaves through the markets, and then of course everything began to rise again. Now the other big thing that's happened is Trump talking about tariffs on copper prices. He put the tariffs on, talked about it a while ago. Tariff prices did jump, as you'll see on the chart. This time, however, they've now collapsed 20%, because as he's talked about imposing this 50% tariff on copper pipes and wiring, but he left out a few of the other pieces to the puzzle when it comes to copper. The levy fell short of the sweeping restrictions expected and left out copper input materials such as ores, concentrates, and cathodes. So overall, with the amount of volatility that's happening in the stock markets, Bitcoin has been holding out relatively well. We've seen the US dollar rise. Bitcoin has maintained its ground above $116,000 support, closing around 117, 118. Overall, we've got the 7-year support level now. Resistance turned to support. Provided it remains above that level, at least in my own opinion, according to my own analysis, I think that's a good sign there long term, because we're essentially consolidating in the background while a lot of these other narratives are going on. You've got US dollar rising, stocks are still going up, and the Fed not cutting interest rates, GDP going up, copper coming down, in the terms of commodities coming down. So Bitcoin seems to just be on the back burner here, yet it is still holding up. So I think this is all still positive longer term for Bitcoin. Now, of course, we still definitely want to see some more volume come through in this market. At the moment, things seem to be a little bit quiet. So the volume, I think, is going to need to come back in order to push these levels, push the price past the resistance levels at around 120 to 123. But overall, there still seems to be enough time in the game. As for the extensions to the upside for Bitcoin, if it can break through these levels, the targets still remain in the mid 130s. With an average price there's a cluster you can see of numbers that are all overlapping. The average price there is about $136,500. If we can break through that level, then I'm looking towards the psychological number of the 140, 150. But overall, ideally, the next cluster comes in at around $163,000. So the first level's first, in that mid 130s, that's going to take us to pretty much all of the extensions to the upside, the 100%, the 150%. And I think that's a pretty good level for a potential pause for the Bitcoin price. If we can slice through that like a knife through hot butter, then I'm looking towards those levels as I just mentioned. 140, 150, then into the 160s. Now, I don't know if that's going to help out altcoins in the short term. We still only see the Bitcoin dominance pulling back roughly 6%. It'll need to get to 58.5%. So that's going to be a total of 6.5%, call it 7% decline. And that's in terms of 66, which is the top there you can see, down to 58.5. That is going to be the overbalance in time and price, providing the dominance does not go back past 66% in any sort of rally that we see at the moment. If that occurs, then I think we're going to have a much handier and bigger altcoin season. But for now, the decline on the dominance has not exceeded the previous decline that we saw through November, December into January. And the reason why that's important is that you need to see more essentially buyers in the crypto market and basically more sellers from Bitcoin coming in or not getting into as much Bitcoin, but going towards the altcoins to increase the altcoin dominance and obviously decrease the Bitcoin dominance. For now, the market has not said that, and the proof is right there in the pudding. Another problem for the altcoin market is the stablecoin dominance. The dominance remains at 4.3%, and with every day that the market doesn't go anywhere, probably not looking too crash hot. But if we can get a nice slice down, at least test the 3.5 or 3.7%, that's going to be a good sign for the rest of the market. And as I've got here on the chart, looking at the hopium and market top area, I think we would, if we are to break 3.77%, I'd expect to see a market top somewhere between 2.5 to 3.7%. That's the stablecoin dominance gets into that space, then I think we'll probably see some sort of market top in that area. Not as soon as it gets into that, but somewhere within that area. So basically, going back to the quotes that I said at the beginning, people lose their head in a bull market. You can keep your head about yourself just following a few simple charts. Now, I'm looking to do a video on cycle tops, crypto Bitcoin cycle tops in the near future, probably over the next couple of days. If you do want to see that, make sure you hit the like button. And if we get over 3,000 likes, I'll know that that's definitely something that you guys want me to dive further into, as opposed to just covering it at a high level on each of the videos. The combined stablecoin dominance is also holding up. We don't want to see this. We definitely want to see it break down from 5%. And in the red rectangle, the major liquidity into cycle top, that's essentially where we want to see the stablecoin, the combined stablecoin dominance break down to. So between 2.5 to 5%. And again, I would expect the cycle top to form somewhere within that region if it doesn't form prior to that. I've been discussing my long-term portfolio with members of TIA Premium. You can find a link to that in the video description. And if you are a new trader or seasoned trader, someone that's been around for a while, but you just want to get that plan a little more secure, this is the place to go. We focus on the cycle, looking at Bitcoin, cryptocurrencies, of course, the stock markets, commodities, and the real estate cycle. So our plan is to run this cycle into the peak, know what to do as we start to head down, and then reposition ourselves for that low in the market over the coming years. Links in the video description. Let's get back to the analysis. Now, it's potentially not all bad news for the altcoins. It just seems like everything, unfortunately, for those holding needs more time. The time aspect is pretty much what a lot of people don't have. That's essentially patience. But what we can see on the total 3 market cap, this one excludes Bitcoin and ETH, but includes the stablecoins, which is why the total market cap is slightly higher here at 1 trillion. This one looks relatively good. It's just holding out above 950 billion. If we start to close below 900 to 950 billion, you can see where the 50% is, that forms the weakness on the chart. But for now, everything is still consolidating above those highs. So it's still good news for alts. It just means it needs more time at this stage of the cycle. But in amongst all of those altcoins needing more time, Ethereum continues to climb higher. The red square I've got here is the run that it went on from 2,500 to 3,900. And you can see at the lows, or at the bottom here, the amount of volume that came in as the market broke out. The same thing happens when you either get a breakout in a bull market, or like you can see on the left-hand side here, you've got a pause in a bear market. So essentially those buy the dippers. And we can see this in the slope of hope. Essentially, the buy on the dippers, the buy and holds, the averaging down, the knife catchers, all these sorts of guys are the ones that step in where you see those huge volume bars in a bear market, hoping for the best, thinking that the time is up. But unfortunately, it is not. You just need to wait for that time to be up. And essentially, you can I think you can get back in somewhere towards the lows. And if you want to be one of the momentum players, at least you're getting it on the breakout of those previous highs. That's essentially how we were watching those lows form in Bitcoin in late 22, early 23. Some of them we're going to get a little bit too soon, like toe dippers. But the majority of them, if you don't have the patience or you need more time to save up those dollars, you want to get in as the momentum begins to break out. So that's essentially what we're seeing with Ethereum. We see the momentum plays on the breakouts in early May, then the consolidation, and then the breakout again. Now we're starting to see the volume slow down. That's not what you want to see for a sustained move. So if this does break 4,000, breaks these next highs here at 4,100, we should see the volume pick up if it's going to be a sustained move. Otherwise, it's probably just a temporary move, could last a few days. And at that time, everyone's still going to be quite ecstatic. They're going to call bears are wrong. You're going to see all that sort of nonsense that plays out. Everyone trying to call who's right, who's wrong. But of course, if you've been around the markets, it doesn't matter who's right, who's wrong. What matters is, are you making money? And so if you do make this few bucks in the short term from 3,900 to 4,100 and it starts to come back down, then you either have two things to do. Have you been putting in too much money, or you're going to take some profits at that time. You've got a little bit of a move here. I'm not saying that the run would be over, but I think it's important to note where we sit in this whole length of move up. It might need a little more time to consolidate, but in the most bullish sense, in the most bullish scenario, we would see volume pick up. We would see the price break and slice through the resistance levels being 4,040 to roughly 4,100. And I think ideally taking out the 4,300 level here, which would be the extension of the first move. Essentially, you would see a larger price move, which tells you the bulls are definitely in control. So if we see a breakout of that, and then prices start to consolidate somewhere above the 4,000 level, which is the previous resistance, that is going to be a much more bullish sign than if it was to test those levels and then close back under something like 3,800 or 3,600. That's a less likely bullish move longer term. Big breakout above, nice volume come in, consolidation above those levels. That's what the macro bullish scenario would be. And XRP is a pretty good example of what just happened. You see the all-time high at $3.30. It broke out to $3.60, putting in a new all-time high, quickly came back under those levels. That's ideally not what we want to see, but it's still holding up above multiple other support levels. It just means it's probably going to take a little more time to reach the next highest prices if it is able to. And if it does, it might not be those extreme levels that I think many long-term XRP holders are hoping for. There's been some ridiculous targets of $100 XRP or $500 XRP, or someone even said 2,000 XRP. I think people are just throwing out ridiculous numbers when you see these big bars to the upside. For now, something more conservative is the consolidation where it is, and then a nice test of that all-time high again. Getting towards the price target, I've got somewhere around the mid $4 level as the first price target once we're able to take out $3.66. That level comes from a major price extension of the overall move. And if we're able to get there, great. I think we're basically hitting that first price target. So it seems to be all happening in the markets. We're seeing a lot of volatility again, as we've been anticipating in this final stage of the 18-year cycle peak before we get to the correction. And there's been no one better to implement this extreme volatility than Trump.
I would give myself an A+.
Absolutely amazing to have Trump in there to bring us the volatility at the end stage of the cycle. I've got plenty more coming up for you guys. Make sure you hit that like button if you want to see a cycle top analysis video in a little more detail than what I share in these videos. Otherwise, subscribe. Links in the video description for the crypto exchanges that have got some pretty good bonuses there as things are heating up. Plus, you've got the free reports coming out every single week. All right, guys, I'll see you back here for the next update video. Until then, take care. Peace out.